All right, welcome out to tonight's advisory report. It is Tuesday, June 9th, and fairly large shakeout in the S&P 500 today across the board and other indexes also. So we will look at the chart and talk about that. For now, our market regime remains the same as it has been since we made the adjustment on Friday. So market condition uncertain, intermediate trend bullish, and short-term trend bearish. You can see that we are playing some defense in our different portfolios that we have, that we manage, everything from ultra aggressive down to conservative. We have 6 different strategies. Let's go ahead and jump down to the charts. And looking at the charts, you can see the intermediate trend is still in a bullish uptrend. The line is green. We are intermediate bullish biased as long as price of the S&P 500, which is what we're looking at, remains above the 30-week moving average, which means we are looking for areas of support on the pullback in, and we are looking to see if that can turn back up and possibly buy the dip on strength is what we like to call it. A week or two ago, the S&P 500 was about 7%. That's extended. That means we feel like it's overheating. Now we're only down to 2.67% above, above the 50-day moving average. The 50-day moving average is here on the short-term chart. It's this red line. As you can see, this is today's action. Now, look at the last 3 or 4 days of action. A lot different than when we're in an uptrend. This is one of the things that we're looking at is the character change. We started getting defensive on this day right here, which is Friday. Monday was a subtle inside day on the lower part of the range of the day before. And today we opened up decently, but then had a massive sell-off during the day where price sunk all the way down to about this level, almost to the 50-day. Buyers came in and pushed us all the way back up. We closed right here, back inside of this 3-day range. We'll be looking to see what happens next couple of days. Can we regain the 20-day moving average? And can we maybe regain above these 2 highs? If we can end up somewhere in this area and be very strong in this area, that would be a short-term offensive signal. But it's more likely that we still play within today's range of today. Let's go ahead and look at the 5-minute chart of the S&P 500. And let's go ahead and look at today's. Remember, we were talking about getting defensive below this range right here. And then you can see a little bit of a gap up. We started having some headway for about the first hour, and then just a sell-off all day long, at least the first half of the day. And then buyers came in, and a good rebound, and into the close, more buyers came in. So we'll kind of see what happens here. We're in what I would say is, on one side of it, a negative day because we were down. Another side of it, a positive day because we found buyers and we came back up. And then the other side of it is really a neutral day because we end up in about the same range that we already were in. So that's a little bit about how we're looking at the S&P 500 right now. Let's go and flip over to the ultra aggressive account. Let's take a look at a couple of the stocks that we have. First, let's look at tech. Tech really starting to sell out. We've sold a bunch of this position, and you can see very similar action to the S&P 500. So we'll see almost the same story. Does this go sideways and break down further? Does it come down? Does it come up? It's day by day right now on these tech-related names. Same look for MRVL, which has really been sort of the leader recently. Opened here, things were looking good, sold all the way down, ran out of downside momentum, buyers came back in, closed right here in the range, dock in. Looking more constructive than the others. You can see this candle is now painted green, which means it really closed higher up in the range. And a couple of the 20-day and closed higher. So we'll see. This is actually a really good setup day. If price takes out the high of today, that would be an offensive signal. Twilio really sold off also. Looking to see where it closed, a massive 3-day sell-off, pretty much taking back all of that 19% day gain. But buyers came in and it got pushed back up. And then we do have a little bit of a inverse ETF that will go up when the S&P 500 goes down. This one happens to be 3 times. So we have a smaller position of this just to hedge out some of the risks that we have with having some of those positions I just talked to you about. But you can see this one was really making money earlier in the day and then, of course, sold off as the S&P went up. So that's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.